Hey everybody, this is John, and welcome to the free video. What a crazy day here. The markets are still open here. This morning we caught some nice moves on the pullback here. I did not trade the indexes, but we did some trades on Netflix and Apple, and we'll take a look at those and why. So for Apple, kind of nice move in this, and just I don't want to hold it overnight here. Netflix, also kind of nice move there. And again, don't want to hold it overnight. Just kind of take the money and run. So the question is, why buy this stuff today? Because the market's obviously pretty scary. And it really came down to the internals. In the premium video, I'll show you the internals from Monday and why we got out of longs and took some shorts. But for today, the main thing here was that you can see that the main thing we're watching here is terms of the VIX, and we got a point here where the ticks made the highest readings of the day and the spiders did not confirm. But when the market rolled over, okay, and this is where a lot of people got really bearish today when the market rolled over right here, look at the ticks, they're doing absolutely nothing. Okay, when we compare this to Monday, okay, the selling is a lot different story, and we'll review that in the premium video. So when you see this, there's a pullback, and you only got minus 600 ticks. The market just doesn't have much there. You can see now we've got about 5 minutes left in the day, so we're getting some action here. So this was the trade here, where we got this huge rip up right here. So the question is why would something like that happen when the markets are so bearish? Well, even during a nasty crash, okay, like this, if we look at the S&Ps here, here's where we came from the high to the low. Even in a nasty crash, you typically will come back to the 50, at least the 50% retracement before you roll over and die again. Okay, so that's why I don't want to hold overnight. I don't know if this market's going to roll over and die or if it's going to keep on rallying. I'm just saying the easy move is over, and the reason I say it was easy is because the internals were telling us like, hey, this thing is ready to rally back. All right. So the question now is what happens next, and in fact, let's look at Apple and then Netflix here. We can already see what the markets did. So for Apple, it was pretty easy in terms of a target. Just kind of, you can see over here to the left, I mean, there's a lot of support and resistance right there. So we were looking for a move into the snow line. We actually pushed through that. For Netflix, I actually thought we'd get a little bit better move. I thought if this thing really got on fire, we could get to 271.70. Now, I actually think we could still get there. I'm just not willing to hold a position overnight in this crazy market. So I'll be looking at that one again tomorrow, okay? And then keep in mind, too, one of the things that has made us very cautious in this market and trading very small has been the 10-day moving average of the put-call ratio, okay? Just keep in mind, when this gets down to this level, it is very scary because it shows that everybody and their mother is long, and when that happens, you're just ripe for a big sell-off, okay? And we haven't been this low in like 3 years. If you look at the last time we got that low, I mean, it's been for a boom right here. You can see if everybody's long, no one else is left to buy, right? And it works both ways. If everybody is short, no one else is left to sell, and then we bottom. So now we're starting to rally back up into neutral territory, okay? But if we do actually, the only way I see this market actually making new highs is if we get up here. This gets up here and it shows that everybody's short. But right now, I think we've seen the highs for February. We rally up to the 5618, and then we retest the lows at the very least. All right, that's what I got. You guys have a good one, and we'll see you at the next update.